Hello investors and future investors, welcome to the channel. In this video, we will be going over cash secured puts. If you're new to the channel, we help you with option strategies that give you consistent revenue and everything related to finance and investments. Welcome to Investment Gains. Let's jump right into it. So today's video is going to be focused on cash secured puts and which stocks are going to be the best to use these strategies. Cash secured puts are an options cheat code that allows investors to make slightly passive income weekly or monthly, depending on your preference. If you're new to option trading, then consider using cash secured puts as part of your portfolio to make the transition from just buying stocks. So, how do we do a cash secured put? So for today, we're going to be using ticker symbol NEO, N-I-O. We need to go to trade options. You need to make sure this is enabled on Robinhood. If you have any issues with getting this enabled, just leave a comment in the description below and I could always walk you through it. So we go to trade options. Now what we are doing, we're going to be selling a put. So make sure it says sell and put. Now we're going to be choosing our strike date. We're going to be using April 16th because tomorrow is already April 9th. And what we're going to do, we're going to choose a strike price below the share price. So for this example, we're going to use strike price of $38. And for buying it at $38, we're going to receive a premium of 110. Now, it's going to be 110 because it's 1.1 multiplied by 100 shares. So this is just a graph of the trade that you're about to put on. So you go to continue. You enter your amount. So we're going to choose one. So I'm agreeing to buy 100 shares of NEO at expiration date of April 16th. And for this, they will give me $110. So now we hit review. Good. So in order for me to put on this trade, I need to have $3,800 in collateral, which I actually don't have right now in my account. Another thing you can do, if you need to increase your revenue, you could also increase your number of contracts. So instead of putting one, you could put two. And as you can see here, you have $220. For new investors, I do not suggest you do this. I suggest you go into at one contract at a time. Now, what happens at expiration? At expiration, the trade could go one of two ways. If the share price at expiration is above your strike price of 38, then you get to keep your premium and you get to keep your collateral. The second option is if your share price is now below our strike price of 38, let's say it's at $37, then you are forced to buy 100 shares at $38. So now you're going to own 100 shares and you still get to keep your premium. So what happens now that you own 100 shares of NEO stock? Well, you still win because now you could take your 100 shares and sell what's called covered calls. In order for you to see how to do covered calls, just take a look at my video. I have a video on covered calls that will help you out. Whenever you sell a put, you get assigned the shares and then you move over to sell a covered call. That is called the wheel strategy. And that is a strategy I've been using for a long time now to get consistent revenue. As you can see, I have a couple right here. So let's jump into some stocks that can be used for this strategy. But before we do this, please like and subscribe to the channel and hit the notification bell to get alerts whenever I post a video. It helps out more than you know, and I thank you in advance. Now, some of the best stocks to use this for is going to be stocks that are pretty much consistent, have an upward momentum or slightly downward momentum. Because what you're actually trying to do is actually keep making revenue. So one of my favorite stocks to trade is going to be Apple, AAPL. So with Apple, I would need to have over $130,000 in my account, which I do not have. But I'm just going to use that as an example. So you go to trade options. You go to sell a put. Choose your expiration date. And now you choose your strike price. So I'm just going to use 129 because this is just an example. You go to continue, you choose your quantity, we'll put 1. So if I were to sell a put right now on Apple, I would receive $123. Another stock that could be used is going to be AT&T. This one requires a lot less collateral, or you could also use Coca-Cola. And this one again requires less collateral. So remember, these are not recommendations for you to use the stocks or for you to use this strategy. This is for entertainment purposes only. So please don't use this strategy if you have an issue with holding the stock, because you will definitely have to hold the stock if you are assigned the shares until you're able to sell a covered call. So I sell cash secured puts on a weekly and receive some sweet premium. If you'd like to see my entire portfolio or see what I'm buying and selling weekly, consider joining the Patreon. The link will be in the top comment below. Also, to help support the channel, like and subscribe and hit the notification bell. And if you want some free stocks, please use my links in the description below so we can both benefit from free stocks. Thanks for watching, and remember, always take your investment gains.